So are we going to have a global economic collapse in 2019? Is the global economy going to be going into recession in 2019? These are the questions I want to answer for you guys today, so stick around. Let's go. Hey guys, welcome back to the channel. If you're new here, subscribe down below. We are growing rapidly, so if you want to be part of the community, make sure to subscribe and drop a comment down below on what you think the global economy will do in 2019. So what I'm going to be doing in this video is actually going through different segments of the world and kind of see how their economy did in 2018 and what the projections are for 2019. So to start us off, let's start with the US economy because that's where most of you guys live, and let's see how the US economy has done so far in 2018, how we expect to close off 2018, and what our projections are for 2019. So in 2018, GDP is actually expected to close the year off at around 2.9% up, and this is actually more growth than we had in 2017, which was around 2.2%. The IMF, or International Monetary Fund, lowered their predictions for 2019 for the US economy to around 2.5%. The OECD, which is the Organization for Economic Cooperation Development, also lowered their prediction for 2019, and they come out with around a 2.7% number for next year. So if you're not familiar, these are actually two different organizations that track the economy, not only the US but also the global economy, and they come up with their predictions for this year and the following year. The reasons that both of these organizations stated for the slowdown in 2019 compared to 2018 was because of two main reasons. The first being weaker global outlook, and the second being trade measures that have already been implemented thus far. So pretty much in a nutshell, what they're trying to say here is that in 2019 they are predicting a slowdown. They are predicting that Trump's tariffs that he did impose will have an effect going into 2019 as well. As a result, the global economy is going to suffer, and as a result, the US economy is going to slow down compared to 2018 as well. So this could mean potential short-term pain in 2019 for the US economy. So next, what we're going to do is turn our heads to Europe and see what's been going on over there in 2018 and projections for 2019. So as we can see here, over the last few months, predictions for growth in Europe as a whole have kind of declined, really. The economy in Europe grew by a measly 0.2% in Q3, which was, quote, the slowest growth in more than 4 years, which is a bit concerning. The reason cited, of course, for this was, again, due to trade, more specifically because of weak exports from Europe. Now, in terms of predictions, 2018 is looking to close out at around a 1.9 to 2.0% overall growth rate in Europe, and the IMF predicts that 2019 will come in at around a 1.9%, and the OECD will come in at around 1.8%. So Europe kind of looks like an economy that's not necessarily declining, but it is an economy that's growing very slowly year over year. We will see pretty much the same numbers next year as this year. And as this cited, there is some concerns about exports, so there is some issues here with trade in Europe. Next, we'll turn our heads to UK, which is also in Europe, of course, but they kind of have their own economy going here, especially with the whole Brexit thing going on. So as we can see here, in the UK, Brexit tensions continue to weigh on the market, which is also felt by the global markets. The UK is expected to grow by around 1.3 to 1.4% in 2018 to close off the year. And what we're going to be doing is going up slightly in 2019 as predicted to 1.4 to 1.5% growth. So very similar story here to Europe, very minimal growth, still growth nonetheless, but very minimal growth. Now we're going to shift our heads to the other side of the globe here. We're going to look at Japan. So we can see in Japan that in Q3, their economy did not have a very good quarter, as the economy actually had a slowdown in growth. However, for the overall growth in 2018, we still are sitting at an estimate of around 0.9% from the OECD number and 1.1% from the IMF number. 2019 looks like more of the same as we saw in 2018, with estimates coming at around a 0.9 to 1% growth overall. So similar story to Europe, slightly worse numbers because the economy isn't growing at over 1% clip. It's slightly below 1% predicted. So again, not really that concerning because we are still seeing growth, but we are seeing some slowdowns as you've already seen globally coming up in 2019. Now, of course, we need to move our heads over to the big dogs in China. So China is actually one that a lot of people have been watching closely because of the whole trade tension, and their economy has really been suffering in the last year, especially the stock market if you haven't been following that. The Chinese index has gone down quite significantly in 2018, along with most Chinese stocks, so Alibaba, Tencent, JD, all these popular Chinese stocks have been hit pretty hard in 2018. So let's see if 2019 looks like a better year for the country. Now, as we can see here in 2018, it's expected to come in around a 6.6% growth. And then in 2019, we are estimating around a 6.2 to 6.3% growth. And if trade war tensions continue or get worse, I believe that this could potentially be closer to 6% flat. So again, China, again, another economy that will have a decline in 2019, most likely, compared to 2018. However, China's economy has been slowing down over the last few years, year over year, and this shouldn't come as much of a surprise, in my opinion, to most investors. So when you have an economy that's growing at over a 6% clip year over year, that is a massive number. So for example, if you look at 2017, China grew at 6.9% year over year, where the US only grew at around 2.3%. So yes, although China is slowing down, it is still significantly higher growth than it is here in the US. So that's something to consider when looking at these Chinese numbers. Although the media is portraying this as a negative, China's slowing down, their economy is struggling, really in 6% growth year over year isn't really what I would consider struggling. And then finally, to kind of wrap everything together, let's look at some global numbers here. So as we can see, in 2018, we're expected to close off at around 3.7% growth on a global scale, which is the same growth that we had in 2017. However, for 2019, the IMF lowered their projection to around 3.7% and the OECD lowered their projection to around 3.5% respectively. And of course, what they do here is that they blame the negative global impacts of tariff hikes for the weaker global economic outlook. So the story is kind of consistent with each segment that we broke down. 2019 looks like it's going to be a weaker year in terms of growth compared to 2017. But it's not necessarily a bad year. There is still going to be significant growth in 2019, but we do have to be cautious going into 2020 after that, because we could start seeing a leveling off here and start declining year over year after that. So I know now I threw a lot of numbers and a lot of facts at you guys, but it is important to sit down for a second, go through this video again if you have to, and understand these numbers that we went through today. We can see that in general, 2017, 2018 have been very strong, but we are seeing signs of a possible slowdown in 2019. Again, that's nothing major, but it is still a slowdown and it is something we need to make note of. So this, of course, has the markets completely rattled, and of course the media stations out there will take this, put fear out there, and go on about how we potentially will be entering a recession in the US or a global recession or all this other fun stuff in 2019. And while the numbers that we looked through today show us that there might be a cooling off period for next year and you can't really rule out a recession for next year, I think that based on these numbers that we're still pretty far off from a global economic recession or an economic global collapse. On the plus side, all the numbers that we looked through still are pretty good. They are still pretty positive. There is still going to be some growth year over year in the global economy and different economies specifically. And there is potential that the trade war tension, trade war fears might get resolved or come to some sort of resolution in 2019. Now, if these trade tensions continue into 2019 and further on, it will most likely continue to affect China, and we might see a growth of closer to 6% as opposed to 6.2, 6.3% as expected. Now, that's still not bad, of course, like we talked about overall, but I can almost bet that if that does happen, you will see headlines saying China's economy is slowing down, economic numbers miss in China, and all of this kind of stuff. Kind of scare people, and as a result, people will start selling off equities. And if you're a long-term investor, this might be another opportunity to buy into long-term shares in Chinese companies. But kind of in a nutshell here, what I would say is that 2019 is actually shaping up to be a very similar year to 2018. It's kind of natural for an economy to go through cycles, to start slowing down when it has, run too far, too fast. And I believe that's kind of what we're seeing now in 2018, 2019, maybe even 2020. But I don't really think that's really much to be concerned about, because that's kind of the natural economic cycle. You can't just keep going up forever. You do have to have some cool off periods. However, that being said, 2020 could be a pretty interesting year and a pretty volatile year for the markets as well. And that's because we do have the elections coming up in the United States in 2020. So there's going to be a lot of uncertainty thrown out there into the markets as well. Now, ideally, the trade war stuff will get cleared out before then. But if not, this could be another huge thing in 2020 with the trade war still going on. And the global economy is possibly starting to decline after 2019. And of course, you have the elections in the US. So whatever happens, make sure you guys are positioned accordingly and you're positioned for pretty much worst case scenario if that does happen in 2019 or 2020. So I hope this video was informative for you guys. It's kind of a different video than my usual stock pick videos. If you enjoy this, make sure to comment down below so I can make more videos like this. And if you don't, comment down below as well and let me know. Either way, guys, thank you so much for watching. Hope you enjoyed this video. Hope you learned something from this video. But either way, don't forget to invest positively and I'll see you in the next one. Peace.